Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm taking you with me to Jamaica as well as Peru, where we're going to be looking for copper. Joining me on the barbecue today is Dan Symons, the CEO of C3 Metals. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, C3 is listed as CCCM, so that's 3 C's and 1 M on the TSX Ventures Exchange, where over the last 3 months, an average of about 56,000 shares have traded daily. The stock's 52-week high is 75 cents and its 52-week low is 20 cents. With a market cap of just over 43 million Canadian dollars and 77 million shares outstanding, today this is a 56-cent stock with a 50 and a 200-day moving averages at respectively 36.5 and 31.2 cents. I see no warrants outstanding, but there are about 3.5 million options outstanding, bringing the number of fully diluted shares to just over 80 million. Meaning an increase of about 5% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about a 5% ownership dilution if, and that's again always a big if, but if those actually get exercised. Management ownership here is recorded at about 7%, 5% is in the hands of a strategic investor, and about half, or 48% to be specific, is in the hands of institutional investors, leaving only about 40% of the float in the hands of retail investors. The effective date on the last officially filed interim financial statement is August 31, and the company had recorded about $1.7 million in current assets at the time, most of which was $1.5 million, and that was recorded in the form of cash and cash equivalents. On the other side of the August balance sheet, I see no long-term debt and just about $365,000 worth of account payables recorded as current liabilities. Now, those numbers are likely to be different by the time you're watching or listening to this, because as we're recording this on March 10, C3 has a $10 million bought deal outstanding, which is expected to close soon, where at least 20 million shares are going to be issued at 50 cents. But it could be more because there's an option to increase that in there. So please keep that in mind and keep looking out for it. Now, C3 recorded about $2.3 million as expenses for the 12 months that ended on August 31st, although that number includes share-based compensation, which of course is non-cash cost. So the total out-of-pocket expense for the company was recorded at just under $2.2 million, which is an average of about $180,000 a month. About 60% of that cost was recorded as office, general, and administrative, while about 28% of the expense was recorded or accounted for by promotional and investor relations activities. The exploration expenditures here get capitalized, so the full breakdown can be found under Note 9 in the financials. And that shows me that a total of $7.6 million was spent on exploration and evaluation of the assets, with the largest cost being a $4.5 million expense, which is related to drilling, whereas $2 million was recorded under geology and general field costs. As always, I've got two ratios for you here. First of all, the exploration to administration ratio, which sat at about 3.45 or 78% in favor of exploration and evaluation. And then I also have the actual drilling to marketing ratio here, which sat at 7.5. So 7.5, meaning 7.5 times as much money went toward drilling as what was spent on marketing. As always, though, try as I may, please understand that I'm not infallible, so I might be making mistakes in my reading and or interpretation of the numbers. So it is safer for you to head over to setterplus.ca to make sure you're getting the full picture. For C3, that full picture is split in four parts, essentially, where the Bellas Gate project, which is located in Jamaica, is one of the main pieces, and that's under a $75 million US earn-in deal with Freeport McMoran, where Freeport can earn up to 75% by funding exploration over two phases. Something we'll talk about. And then also in Jamaica, C3 holds another 50% in a joint venture. It's called the Superblock Gold Project, as well as they hold 100% of the Khaleesi copper gold project in Peru, which is near major mines like La Bombas. And then there's also Jasperoide, the Jasperoide project, which has a historic resource on it, which is probably on your screen right now, which according to C3, there's more upside potential, all of which is hopefully going to be part of the conversation today. But first of all, Dan, this is your first time being here, so I should probably be shutting up at this point, but thank you for being here.
Thanks, Antonio. Thanks for having me.
Pleasure is all mine, of course. I'm looking forward to the conversation. But as I said, this is your first time on the CEO Barbecue. So obligatory first question, who are you and why do you think you're the right man for the job?
Yeah, I joined the company in September 2022. The board solicited me for the role. If I'm being completely candid, my first reaction when I was solicited was, I don't think this is going to be for me. I'd come from I was working for an operating company at the time, where we had joined a company with two operating mines, and we'd built that company to a five mine profile. Prior to that one, I had worked in the exploration side of the business, for the first part of my career, from exploration all the way through to advanced exploration and pre-feasibility, feasibility studies, permitting, capital raising, and we were 6 months into construction when we were acquired by a larger producing company. So my background is financial in nature. But I've 19 years in the mining industry, working, as I said, from early stage exploration all the way through to producing multi-asset, multi-mine companies. And, when after the board solicited me for the role, I had to think really long and hard whether I wanted to go back to the early stage exploration side of things, just knowing the risk and really the change in the capital markets profile. From over the last several years, and it's been a difficult time for junior explorers. But as I dug into the projects in the portfolio, and signed a confidentiality, brought in my own geologist to review all the technical information. I reviewed the mining law in Jamaica because I was not familiar with it. Really started getting excited about the opportunity and joined the company. So. In September of 2022. And, I think, why am I the right guy for the job? I think that I fit the skill set with the existing team, in terms of a different skill set. My career has been capital markets focused, whether it's raising capital for exploration or raising capital to build a mine, whether that's debt or equity for mine builds, acquiring assets, divesting of assets in this industry and the M&A side. That's really been my entire 19-year career. C3 has a very strong technical team and had a very strong technical team in place when I joined the company, but was really lacking that capital markets experience and somebody who could have that global investor network to really tell the story and be able to raise the capital, so then the technical team can do the work that they need to do to add value to the business.
Mm. Has your technical team worked in similar geologies in similar parts of the world before?
Yeah, so our vice president of exploration, Steve Hughes, who's arguably the VP exploration for a company the size and scale, is the most important role. I have no ego about that, being the CEO, and really, Steve and I act as partners in this business, and he manages the operational side of the business, the exploration side, while I manage the capital market side. I have a heavy hand in the capital allocation of what's going into the exploration, and we communicate regularly, but we really are partners in this. And Steve, he's spent his entire career in porphyry and skarn style deposits, copper gold deposits. He has 25 years in Indonesia. He's a Canadian who moved to Indonesia, 25 years working, and then moved back to Canada I think it was in 2018. So he's been in Canada since 2018. And with what we're doing with our portfolio at C3, we have a lot of porphyry and skarn and epithermal potential. He has over 25 years experience of being highly successful with this and either discovering and or delineating 34 billion pounds of copper and 47 million ounces of gold over 14 projects.
Hmm.
So, we feel that he's the right guy to lead the technical side of our team.
Hmm. And I definitely want to talk about Jamaica as a jurisdiction, Dan, later on. But do you guys have someone residing in country, someone from your team that's permanently on your team residing there?
Yes, absolutely. Our project manager, Okelia Dose, is Jamaican born. We do everything we can when the skill sets allow us to hire locally. That's a big part of the culture of the organization. So both in Jamaica and Peru, we have teams in country made of nationalists from either country.
Right. The portfolio approach is also something I want to touch upon. So hopefully we'll get time to do that later on. But let's go back to the insiders here. Go back to my smell test before we get into the actual barbecue. The presentation says insider ownership here is about 7% of the company. I know you came in later, so you weren't there at the forming of the company. But how much of that insider ownership is you personally, and what's the average price you've paid for your shares?
Yeah, I probably about 0.5% myself, which doesn't sound like a big number in terms of percentage, but in terms of what it means for me personally from a net worth basis, my first year joining the company, either through private placement or open market buying, I've never exercised a single option yet. So I put 10% of my net worth into the company. So I think it's a healthy number for a junior company like we're running today. Um, I'm sorry, I forgot the first part of your question there.
I was asking about the average price that you've paid for those
Oh, the
shares.
average price. My average price is 67 cents a share, so I'm slightly underwater. But I take a long-term approach from what we're trying to do and what we're trying to build with our portfolio and our strategy to move the business forward. So I joined the company, it would have been the equivalent of 52 cents. We got up above $1, fell back all the way back down to 20 cents. And we've been having some positive momentum here in the stock in the last few weeks, really to start the year this year, and up to about 57 cents today.
Do you typically invest in other companies as well? And if you do, how big of a position is C3 in your portfolio?
As tempted as it is, knowing the um, the industry so well, just be from a risk standpoint, it's I find it difficult for me to invest individually in other mining stocks. I do take a basket approach in terms of different ETFs that will collect a different basket if I'm looking for exposure. For me to do the proper diligence on other individual mining stocks, I think it would be a full-time job in itself to do that, and I don't feel like I have the time to do that. So C3 Metals, as I said, I put 10% of my net worth into the company, so I'm fairly vested and motivated into what we're doing.
And that's exactly what I'm after here, trying to figure out the incentive to which point. And I wouldn't assume this to be the case for you specifically, but does anyone who's on your board or any of the executives personally own a royalty on any of the projects?
No one personally on the insiders own royalties on any of the projects. That would likely be viewed as a conflict of interest. So we don't own royalties on our projects. These projects were assembled, and then we've come in, and it's been a pretty new board and management team. With this outside of me, and we've expanded on it since I've gotten here. But the Peruvian assets were put together by the existing board and management team. Jamaica was originally put together and then expanded upon by the current team, but was originally put together by a previous management team that our chairman, Tony Manini, had invested in.
Mm.
And he was, Tony's a geologist by trade, but very entrepreneurial, highly successful career. And we can get into that as much as you want. But essentially the company was passing the hat to raise a financing, and he had already put seven figures into the company, and he was not thrilled with how they had allocated the capital of the previous financing, the previous management team. So basically, he said, he had a choice to make: either cut and run and take a loss on an investment, but he really believed in the asset base, or if he was going to basically finance the company to keep it going, he would restructure the board, come in with as a chair of a non-exec chair of the board, restructure the board and management team, and that's what he's done.
The what I've seen happening over the last couple of months is also an increased volume as well as positivity in the share price, related obviously to that agreement that you signed with Freeport and so on and so forth. But where's that buying coming from? Have you been able to identify any new big buyers? Or because again, the volume is also notable.
Yeah, one of the challenges I think we have is, and we've worked hard the last couple of years since I've been here to really increase the institutional ownership of our shareholder base, the institutional investor ownership. I just think in the current climate where it's so difficult for junior explorers to raise capital, it's a lot easier to do if you can go out and make 5 or 10 phone calls to institutional investors who can write bigger tickets than be chasing hundreds and sometimes thousands of retail investors on those types of financings. The downside for that means is we have a pretty tightly held shareholder base, which means liquidity is an issue. So one of the things that is a big focus for me now that our institutional ownership is going to increase as once this private placement closes that's currently open, expected to close on or around March 19th. So we need to do a better job, and it's going to be a big push for me to go out and really market to high net worth and retail individuals that play in the space I think we've done a good job setting up the company and the shareholder base with both the assets and the shareholders we have. And now we need to go in and really find people who will buy and sell on market to create some additional liquidity.
Do you expect to be one of those people in 2025? That's something that, but before the stock price went up, was maybe more of an obvious question because you were trading closer to those 52-week lows. But now that the stock price has gone up, would you expect to be a buyer?
I do expect to be a buyer. I'm in a blackout period till this financing closes. And previous to that, when we were sitting in around our 52-week lows, we were pregnant enough with the Freeport deal that we were inking that we put the insiders into a blackout period. We're pretty conservative about that. So, and then previous to that, we did a smaller private placement last fall that closed in October of 4.5 million Canadian. So we've been in a blackout period for quite a period of time. I believe we don't, coming off of this next financing, typically we take two full trading days, and then we'll have the ability to be in the market. And I fully expect to be in the market myself at this level. Even buying at this level lowers my average price, and I think we've done a reasonable job setting up the business now with multiple assets that we expect to have drills turning on by mid-year. It gives us maximum discovery potential.
This $10 million financing, by the way, let's assume that it goes well and it closes. It's at least 20 million shares that you're going to be adding to the registry here. And the first thing I thought about is this is a bought deal. Good job on the no warrant, by the way. I mean, that should be said. I don't like warrants myself personally, so I'm happy to see a financing without them. I'm happy to see potentially the market moving that way. And you can talk to me about that too. But what I'm wondering here, or what I started wondering at first, is that you're adding 20 million shares at least. Where are those shares going? Because I don't want to sort of wake up in 4 months and see the stock price trading back down because those shares were not placed in the strongest of hands. So how many people are buying those 20 million shares, if you can tell me that, and where is that generally being placed?
Yeah, we were very well oversubscribed on the bought deal financing. So we've had to cut back orders on that. It's a good problem to have as a little company, but it's all institutional investors, as well as we did bring in a couple high net worth retail that had been supporting the company during the tougher times to make sure that they could at minimum maintain pro rata. So they weren't being diluted. They've supported previous financings, and we carved out room for them. But it's primarily all new institutional and existing institutional investors coming in. So I don't have it sitting in front of me, but there's less than 15 names in the book, very tightly held. Most people were cut back 40 to 45% on the order that they put in for the placement, just because we were so well oversubscribed. And I do agree with you. I'm not a fan of warrants myself, and you noted it off the top. We don't have any warrants in our capital structure. There have not been a single warrant issued since I've been here. I don't want to never say never, because as a company that does not generate any revenue, and you rely on the equity markets to fund your business, sometimes you do what you have to do. But we've been fortunate with finding the right types of shareholders who are thinking long term, who fully understand the risk reward scenario, that the people are looking for 10 to 20 times their money on investments like this, and they're not looking to flip out of the stock after 4 months on a double. You're looking for much more than that with the portfolio that we've put together.
I appreciate you being open about the number of participants. That's not something that's typically made public or discussed, but it is nonetheless important. And I also appreciate you not necessarily boasting about, oh, I'm never going to do warrants, because as Mike Tyson used to say, everyone's got a plan until they get punched in the mouth. And if we know one thing about junior mining, is that it does tend to punch you in the mouth. That about does it for my initial vehicle and management smell test, Dan, if you will. Let's talk about the assets here. You've got four of them. It's a portfolio approach, which again, I told you I want to talk about, but which one would be your favorite? Like, if you only had money to drill one, which would you drill?
I think it comes down to, when you talk about if you only had money to drill one, it's risk reward of what you think you can do. And if we only had money to drill one, it would be our Khaleesi project in Peru, in southern Peru. That project's never seen a drill hole. So we're going to be the first ones to put in some holes into it this year, and it looks really exciting. We're surrounded by operating mines, the three closest mines, two of which are within 45 kilometers of us. If you look at what's been depleted from those mines and what's left to be mined of the existing resource, all of them are over 1 billion tons of ore. This is absolutely a world-class, very well-known copper producing belt in southern Peru. There's another development stage project that's over 550 million tons identified. So we're surrounded by major companies with major operating mines. We've been able to sneak in over the last few years and assemble 300 square kilometers. On the eastern side of that property, we have the Jasperoide project, and on the western side, we have the Khaleesi project. Within that 300 square kilometer area, they're about 8 kilometers apart from one another, and as the crow flies. And we really like Khaleesi we've always liked it geologically, what we could see on the ground. You have outcropping mineralization. So, you have mineralization right at surface that's sampled well. It looks from the geochemical signature we're getting from soil data and the outcropping rock that the scale potential is very large, as well as the geophysical data that's just been coming back shows that the scale potential is very large. So similar to what you see in this belt with some of the other mines in this area in terms of scale potential. The question we don't know is what's going to be the grade when we drill. We know the size of the intrusive body it looks like to be quite large. We won't know until we drill what the grade is, but that's the business we're in, is to try and find economic mineral deposits, and it's absolutely begging to be drill tested. So if we only had money to drill one, that would be the one that we would allocate capital to.
What's your target size here, though? And maybe you can talk to me about size and grade, but if all of your geological dreams come true, how big could this thing get? And what would the average grades have to be to make this size of a deposit mineable in that part of the world?
Yeah, no, that's a really good question. And I want to preface this by saying, we don't know what we have yet. We could have zero economic tons there. I don't want to over promise anything, but if we just do simple math based on the geometry of where we see very high grade copper and soil, outcropping rock, and what the geophysical data is telling us, you're looking at a 500 million ton plus target, and it could be on its way to 1 billion tons. So that's what we're looking at as a target. Now that can either increase or decrease as you start drilling. In terms of economic grade, the lowest grade mine along this belt close to us would be the Constancia mine, operated by Hudbay Minerals. It's running about 0.3% copper and has a molybdenum byproduct credit. And then the highest grade on this belt would be the Las Bambas mine, which is running 0.6% copper with both molybdenum and gold byproduct credits. And we see in our geochemistry, we see both molybdenum and gold as well. So, without ever having a drill hole in this ourselves, my expectation of what we'd want to see is somewhere a copper grade averaging somewhere between 0.3 and 0.6 with byproduct credits. And, if you look at the Antipaquet mine that's further to the southeast that Glencore operates, that's the other big one along this belt close to us. That one's running about 0.5. First Quantum Minerals has the Cara project. That's a pre-feasibility stage at about 550 million tons. So that's at 0.5 copper. But all these will have byproduct credits from other minerals. So, but they're big bulk tonnage open pit type operations.
You say Khaleesi's never been drilled before. Is that indefinite? Like historically, like no one has ever put a drill hole in this project.
That's correct. No one's ever drilled
How come?
a drill hole historically. It was a bit of a checkerboard with multiple owners. So we've consolidated and managed to put this all together. It took us about 2.5 years to put it all together, and you're dealing with we're up over 30,000 hectares. So a lot of these deals that we've done have been 100, 200 hectares at a time. So it took time to put it together. I think the other reason is the things that drew us to this area. There were two things. One, there's an outcropping skarn body that you can see copper mineralization at surface. So that brought us to this area. And then two, there was a road that was put in, and along the side where that road's been cut in, you can see some outcropping porphyry style mineralization. And our theory has been between this road and that skarn, you have about 3 kilometers in the center, and that a big part of that area, greater than 60, just over 60%, is covered by what we call glacial till. That means when a glacier is slowly, moving and melting down and rolling down the side of a slope, it'll deposit a bunch of mud and sand and rocks over top that are not really indicative of what's happening in that particular area. So it can mask or conceal what's going on. But when we saw the porphyry style mineralization through this road that was being put in, we've since found some outcropping porphyry style mineralization in the field, as well as this big skarn. That's what makes it look like it has potential of size, as well as all the geochemistry that's come back. The question we've always had is what's happening underneath this till occurrence, because it masks that area. But the early indications from the geophysical data that we've been running does show that there's a very large anomaly beneath that till occurrence that connects up to the skarn that's outcropping in the porphyry style mineralization that's outcropping on the other side. So that's why this is a very large target. But again, it'll come down to what the grade profile is as we get in and start drill testing.
You say that it was a checkered board before. You do have some majors as let's call it. Well, you have mining companies as neighbors, let's call it. Why are they not stepping in now? I mean, you seem to be open to the JV model or the earn in option agreement. Why is nothing on the table now? And would something, I mean, if something were to came in tomorrow, would you say yes to a JV for Khaleesi?
So those are loaded questions, but I'll do my best to answer them where we're commercial, so everything's always available for the right price. But we have to look at a risk reward and weighted, a risk adjusted. What do we think we can do for what share dilution does it take for the potential upside versus the downside if we don't do that? I would say that our strategy has been to, we think we're good at identifying early opportunities, consolidating district scale size packages, working with governments, working with communities. And then what we want to do is we want to get in and do the initial tests to try and really wrap our arms around what we have, the initial drill test. And that's after we've done the right level of boots on the ground mapping, field mapping, and not really understanding the geology. After we've done the right level of geochemical work, whether either in rocks where they're outcropping or soils where we do not have outcrop, and the right level of geophysical data. So we have all the tools in our toolkit before we drill. Too many companies rush off to drill, and yes, it takes longer with our approach, but your chances of success are a lot higher. So we want to make sure we have all that full data set. The thing about sorry, I've gotten sidetracked. What was the original question? I apologize, Antonio.
We were talking about potentially getting a JV.
Oh, JV partner. Yeah. The thing about that, so with the approach that we take, what ends up happening on that initial drill test are usually one of three things. In the worst case scenario, your thesis of why you put this package together doesn't hold together. You can see that it's not going to be a mine. Like we're not here to mine the market. We're here to find a mine. We're focused on economic geology. So when we have a tonnage target, we say, what does the grade need to be within that tonnage target to be economic through experience as operators, and jurisdiction and infrastructure and all those things. So we look at that, and we want to do initial test. If it's clearly not going to be a mine, then we would look to divest of that asset as quickly as we can for as much as we can and recycle that capital into the business. The best case scenario of those three outcomes would be if we do an initial drill test and we get very good grade right near surface, because then it's very inexpensive to drill out. The valuation of the company should, in theory, move very quickly in an upward trajectory, where then you're raising a capital to continuing to drill out that resource, which is less dilutive, and it makes sense to really hammer it hard for a couple of years and to really wrap your arms around what you have. But then there are instances like we just saw with the Bells Gate project in Jamaica. We came in, we put all that data together. We did about 13,000 meters of drill testing, and we can see that the potential prize there could be quite sizable, but you're going to need deeper holes to really answer that question, in our view. And that changes the risk profile and capital profile for our shareholders. And therefore, we've brought in a JV partner in Freeport earning in on that. And I don't think we could find a better partner, who's, Freeport being the largest copper producer in the world. So it's a good endorsement and testament to the technical work that our team's done to identify this opportunity. But at Khaleesi specifically, we have been approached by multiple parties looking to get involved with that asset. And as I said, we're commercial, so we listen to everything. We never shut the door on anything. But to this point in time, we feel for the money that we need to raise and the share dilution versus the risk-adjusted potential of the asset, it makes more sense. We think on a per share basis, we have a higher probability of adding more value by keeping 100% of the asset today. So, we think about these things on per share basis as owners of the business ourselves. And, we'll do an initial test. We plan to do 6,000 to 6,500 meters this year at Khaleesi. That'll primarily be all the second half of this year. And we'll let the data decide, does it make sense to keep going by ourselves, or does it make sense to bring in a partner? That's how we view it. The data will tell you the best and the overall market environment, commodity price, those sorts of things. But you have to look at it by, when you're going to go issue shares, what's the alternative to dilute at the project level and reduce your risk that way versus keeping 100% of the upside by having 100% of the assets. So we look at those things all the time.
How much is that drilling going to cost? What did you say, 6,000 meters?
Yeah, so for 6,300 meters, it'll be just over 3 million US, about 4.5 Canadian. It looks like all in with geologists and assays and everything to run that full program.
Do you think that's going to be enough to either make a decision to either move forward or to kill the project? I mean, is this a large enough budget to drill to kill, if you will?
I think we're going to be able to answer two questions. I think we're going to answer the question of do we have the type of, because we'll do some pretty wide spaced holes at first. So we'll answer the two questions. One, what do we think the potential tonnage is in the skarn? Which skarns are typically higher grade than the porphyry, but the porphyry will have more tonnage potential. And then we'll answer the question on the porphyry on, is it there and what depth is it at? Because right now, it looks like it's very close to surface, but where we're seeing the porphyry style mineralization is not in your typical host rock.
Mhm.
So it's cutting up through a batholith and through a diorite intrusive that we don't think is the actual source, but it's coming. We think it's venting off of a porphyry system that's just down below. And the geophysical data does not suggest that we're going to need too deep of holes. We'll probably drill 300 to 400 meter holes and try and answer that question. But we like to keep the optionality open. If you need, again, if the data comes back from this initial round and all the alteration looks good and hypothetically everything looks good, but like we see in Jamaica with Bellis Gate, you're going to need some deeper holes and it changes the capital profile of us, then we'll consider bringing in a partner, and it's just then comes to structuring the right deal for our shareholders.
You just said just down below. That's what I wrote down. How deep do you want to go this year? What's the thesis as to how deep this system extends? Because again, you're dealing with that cover. Cover's not too thick, but you got to get through it. And then how deep?
Yeah, the cover looks like it's anywhere from less than a meter to up to 15 meters thick from what we can tell through the road cuts and where we can see it in creeks. So it is variable, but so far from what we see, it looks about 15 meters thick at maximum. So it's not bad.
Mm.
We want to test, basically do a test down to 300-400 meters and, kind of the initial open pit depth and see what fits within that on fairly wide spaced fairly wide spaced drill pattern. And then if you have success with that, then we would come in, depending on what the market tells us and what we see technically from that program. If everything went well, we would look to move into a 20 to 25,000 meter program in 2026 and really move towards resource delineation at that point. But we need to first prove our theory of what we see based on the data that we've collected today, which is the geophysical data, the geochemistry data, and then the geologic mapping that we've done, and say, is our geologic model holding together with this data based on what the initial drill results tell us?
Hmm. When it comes down to doing that work, that's when you want to have someone step in. Is it specifically an asset level deal that you're looking for? So specifically a JV, or would you consider equity or anything really?
Yeah, I mean, we look at all these things. We've had discussions with party on both the corporate equity side and the asset level side. And I think it really depends on how much risk do you want to take on versus reward, because anytime that you bring in an asset level partner, you're reducing your risk, but you're also capping your opportunity cost to the upside. So you have to think about it in those terms. I'm a big believer that the data will tell us what's the right decision in the context of the market at the time that we make those decisions. You know, People hear the word porphyry and junior explorer, and sometimes they go running on the investor side because they realize the amount of capital that it takes to proper drill one of these systems out. But then, there's other cases where it does work out very well for investors, like Filo de Sol, for instance, the Filo Mining's Filo de Sol project, which was just acquired this summer in a joint bid by BHP and Lundin Mining, although Lundin had been involved in it on the equity side as a large shareholder. So they had that support of that capital, but that asset was now acquired for 4.5 billion Canadian. And, so yes, these things are capital intensive deposit styles to properly drill out, but they're also what every major company looks for, because the mine life profile of these are multiple decades, fairly consistent grade profile. You know what you're getting in terms of cash flow from these mines once you sink that initial capital investment. So that's what all the big guys are looking for. And we're really out thinking as having members of our team and board who have worked for larger operating companies. we really try and think about how those operating companies will think about our asset base. And so we try and put these things together to be amongst the goal is to be amongst the most attractive of the explorers.
Well, if we could get more specific on this, and I understand that we're going way over in the hypothetical realm here, but you said you've essentially turned down a couple of maybe not official offers, but suggestions to do a JV or to do something with this project. What would you not turn down? Like, what does a deal look like that you'd be happy with?
You know, I I haven't seen one yet, so you have to see it to know. But for instance, for someone to come in and earn potentially like the deal we just did at Bellas Gate in Jamaica to earn 75% of something, and before we have a single drill hole into it, when our investment that we are going to put into it is not that, it's today about 10% of our market cap for that program. If we think about 4.5 million and we're trading close to 45 million Canadian. So, you think, okay, we're going to take 10% on this program to really try and wrap our arms around. And that can go both ways for us. We can show that the grade might be too sub-economic, or we could show that it's in line with other mines in the area, and then our stock will fly on the back of that if that comes to fruition. So we don't know until we drill, but for the risk reward standpoint, because we have a diversified asset base, it makes sense to do that and not cap our opportunity cost. And because if we get lucky with one of the assets in our portfolio, we will have that home run approach where you end up with good grade near surface, and then you don't need a partner really until you're going to move towards development and construction decision, because you can go and just drill the snot out of these things for multiple years and really add a ton of value that way.
Hmm. How's the topography over in Khaleesi? And why I'm asking this is because I'm thinking about timing. When can you go and drill it? How accessible is it?
So you can drill 12 months a year at the Jasperoide project. We drilled out a skarn resource there from the first of 13 skarns we identified on Jasperoide on the eastern side of the project. We drilled all year round. So it is at elevation, 3,800 to 4,000 meters elevation, but it's on a plateau. Some of the large mines like Constancia and Las Bambas have done a lot of the heavy lifting with infrastructure in both roads and power in the area. So we have the opportunity to piggyback off that. We have two different road accesses into the property. It's really, really easy to get around. So, we were not the first mover there, but we've managed to, for a junior, sneak our way in with a pretty large strategic package, not just MMG with Las Bambas and Hudbay with Constancia, but our other closest neighbors are BHP, Rio Tinto, and First Quantum. So we're surrounded by big companies, and I just think it speaks to the potential of this entire belt.
Hmm. Is there any local activities? I mean, do people live there? Have you consulted with them? Are they happy with you potentially drilling this year?
Yeah, absolutely. So there's indigenous communities in the area, mainly farming communities, fairly poor communities. We spent the time to build trust with the Kankwani community, indigenous community at the Khaleesi project as an example. That was a 22-month process from start to finish, and then we entered into a surface access agreement that we announced last August 2024, with the community, and they're very excited to have us there. Some of the feedback from the leadership of that community was just recently was if we had have known that the relationship would be so strong and we would develop this relationship of trust, we would have entered in an agreement a lot sooner with us, which is really nice to hear, because that means our community relation team is doing the right job. And in terms of my experience, whether it's economically depressed community in South Carolina in the United States, whether it's working with the Ejido communities in Mexico, or working with First Nation communities in Canada, or now the indigenous communities in Peru. At the end of the day, what I've always found is people just want to be listened to. They want to have the opportunity to explain how many generations they've been on that particular piece of property, and to have the opportunity to get to know you before they're just going to come in and do a deal with you on your ability to come in and do work at the surface. So those things take time. I think sometimes the market doesn't fully appreciate that and thinks that there's these massive community issues when it's not. It's just like, if you go and you start dating somebody, you're not likely to propose to marry them a week later. You want to get to know them, spend a lot of time together before you commit to one another. And it's very similar. That's a good similar analogy when you're dealing with a local community in our industry.
I like how this turned out into dating and marriage advice, because sometimes I could use some, and I actually wrote it down. People just want to be listened to. Maybe that is the marriage advice right there.
Yeah.
But let's talk about Is it Jasperoide? Am I saying that right?
Jasperoide.
Jasperoide. What does that mean? Does that mean anything?
It's a type of rock.
Okay.
It's a type of rock unit. And Jasperoide is well, that's how you say it in Spanish. Jasperoid would be in English. Jasperoide in Spanish.
Oh, okay. Jasperoide. Okay, I see it on here. Yeah, nice. I should have known this before. What are you doing what are you doing there this year? This is another 100% owned project of yours. Are you going to have the money, the time, and the ability to do some work there?
Yeah, we don't have a huge program set there. We may go in and do some surface mapping on a couple other skarn targets that we have along that belt. So at Jasperoide, we identified 13 skarn prospects over a 28-kilometer strike extent along the belt that's running through the eastern side of the property. It's clearly a magnetite belt with a lot of iron, and with that, you often get skarns forming that contain copper. None of these skarns look like they're particularly large. If we just from what we've been able to see from surface, they look like they're 40 to 60 million ton potential for each one. Our thinking was if you put 3 or 4 of them together, you're going to have 150, 200 million tons with a central processing facility. And, our first entry into southern Peru was through the acquisition of a private company by the name of Latin America Resource Group. And they had 57 square kilometers on the eastern side of this property, and we've vastly expanded it since then to identify more of these targets. But we've only systematically drill tested the first of the 13. That gave us a measured and indicated pit-constrained resource of 52 million tons. So right in that range of 40 to 60. 52 million tons at 0.5 copper and 0.2 gold, which means within that pit shape, you're going to have 570 million pounds of copper and about 325,000 ounces of gold. We like the opportunity to go in and test some of these other skarns, but from a capital allocation decision, we want to at least see what's happening at Khaleesi first, because that has the chance to be a major game changer for us before we're going to commit too much more capital over to the Jasperoide side of what we're doing.
Why don't you, and here's some 75 IQ thinking on my end, but why don't you just sell it? Sell it and get more money into to keep more of Khaleesi.
One of the things I like about the portfolio approach that we take is we do have a lot of optionality within our portfolio where we can monetize certain assets to fund other operations, other exploration. We can bring in partners on some assets, keep others 100%. It leads to future optionality of creating spin-out companies. If C3 Metals is acquired, you can spin assets into another company. You can break up the company, different jurisdictions, and add value that way, similar to the way the next gen guys have done. So we like the optionality within the portfolio. I think before we had parties approaching us, for instance, at Khaleesi to purchase that. And outright, because there was a perceived community issue, because it took almost 2 years to get a community agreement in place. To me, it was never a community issue. It was the time that it takes to build the relationship and build the right level of trust and really listen and hear what the challenges are from the community living in that area. So It would have been pretty short-sighted of us to do a premature sale, I think, before we do a proper test of that. And there was we did have certain shareholders say, like, look, you could sell this and you could use it to fund the exploration at Bellas Gate in Jamaica. No one's complaining today now that we have Freeport as a partner and we have 100% of Khaleesi with how prospective it looks and how we have the communities. We're in a great place with our partners in the community. We're getting ready to go and move towards first drill program there by the middle of this year. So, sometimes we have to think about things as a management team, and you're running a business, and we're not looking. You have to be aware of the actions that you're going to take over the next few months, but we really need to think about things over the next few years when you're running a business. And that's how over the longer term you add the most value, in my opinion. And otherwise you're just constantly chasing your tail and making hasty decisions. And again, the data will tell you the right decision to make. And thus far, the data that's coming out of Khaleesi looks really, really good. And we want to give ourselves a shot to hopefully make a major discovery.
What's your biggest challenge for Khaleesi, though? I mean, listening to you speak here, one might think there's no challenges, but as we know, this is exploration. There's always challenges.
Yeah.
What keeps you up at night?
I think we've done a lot to de-risk this. If you would have asked me that question, you have to think about it this way. It took 2.5 years to consolidate the ground and took another 2 months to get the community agreement in place. And then it took another 3 months to get our approval for the first 20 drill platforms from the government. So if we've just done a lot in the last 4.5 years to de-risk the project. So someone coming in and looking at it today is going to have a much different perspective of 2 years ago, 3 years ago, where the project looked like where it looked like, oh, it's interesting because it's in the right neighborhood, but these things take so long in southern Peru, which is with working with communities, getting permits in hand. And now we've gone and we've de-risked all that. So, I think right now going forward, our biggest risk is geologic and its grade. Is what is the grade profile? As I said, we have some really nice samples that we're getting from surface, but those are rock chips, and rock chips don't make a mine. We need to see drill holes and we need to see broad widths of economic grades, and we have no idea until we drill the holes. And so I think that's the biggest risk now for Khaleesi, but knowing the potential because of the other mines in the area and the other projects along this belt, this world-class belt, it's absolutely a risk worth taking for the limited capital it takes, as I said, about 4.5 million Canadian to do that initial test versus what the reward could be. So we're moving in to do that now, and all those other things, we had to go through them and de-risk those things, but we've now mitigated all those risks by coming out the other side.
So as far as I'm getting it so far, and I do want to talk about Jamaica and your projects there, I hope you still have the time to do that here, Dan. But Khaleesi all the way at the top, Jasperoide all the way at the bottom, if we can call it that, in terms of your haste to want to go and drill it. So in terms of the importance that you're sticking to it within the context of time. But then in between, you have Superblock and Bellas Gate. Is it because of the Freeport deal that you would place Bellas Gate higher up on the importance list?
Yeah, I think that the target size at Bellas Gate is something that's fairly substantial. You're not going to get a company like Freeport I haven't looked in the last couple of weeks, but when we did the deal, it was about 55 billion US market cap, largest copper producer in the world. They own 3 of the top 20 producing copper mines in the world. So, they're looking at projects and trying to earn into projects and partner on projects that can have the potential to move the needle for them. And so that's very high on our list and has been very high on our list at Bellas Gate. The challenge for us was we could see it's not going to be easy from a capital perspective after putting about 13,000 meters of drilling into it. It looks like from our interpretation, it looks like we're essentially drilling into the fingers or the hydrothermal channels where we're getting decent mineralization on average 0.5% to 0.6% copper equivalent when you factor in the gold, about 0.4 copper, 0.2 gold. over 200 to 300 meters in width. But as you step out, then you get these areas where there's nothing, and it looks like from the geophysical data, and it happens a lot with these porphyry systems. You have these hydrothermal channels, or we call them fingers, with where the palm of the hand is really where the action is, and the grade profile, when like similar to like a Filo de Sol or the Filo minings, they had a C of low grade averaging 0.1 to 0.3% copper equivalent in that first 500 meters of that deposit. But the ratio of sulfide minerals, as well as the geophysical data, really suggests at Bella's Gate that there's potential for something quite sizable at depth. But when you're talking about depth, you're increasing your risk profile geologically. You need grade, you need higher grade, and you need continuity of that grade for a mineable resource. And you're increasing your capital risk because it's going to increase your cost to answer the question on economic viability, because you need a deeper drill holes. And, we've seen at the Bella's Gate project that basically where we're getting a lot of that 0.4 copper, 0.2 gold, we're really in the pyrite shell of the system. So I'm a finance guy, so it's a little dangerous when I start talking geology, but doing it for 19 years, I know enough to be dangerous. And, I really like in these, for a generalist investor, I really like in these porphyry systems just visually to help conceptualize it to a hard-boiled egg. The hard-boiled egg, you have the center part of the egg is the yolk, which is the core of the system. And in a porphyry system, the core of the system, you typically see a lot of bornite is the primary mineral, and each mineral bornite is about 2/3 copper. And it deposits where it's hot during the heat, in the heat of the system, so it's right in the center. The white part of the egg would be transitioning into the chalcopyrite zone, and chalcopyrite, each mineral is about 1/3 copper, so lower grade than bornite. And then the shell of the egg is the pyrite shell, where it's an iron sulfide mineral that doesn't contain any copper. So now these aren't, unlike a hard-boiled egg, when we think about these porphyry systems, it's not a clear cut. These minerals deposited at different temperatures, but they start bleeding into one another. So, for instance, when we're getting our averages of 0.4 copper, 0.2 gold right near surface, when we start a drill hole, we'll be in ratios of 10-1 pyrite to chalcopyrite. And you get down about 300 meters, and that ratio might be 5-1 pyrite to chalcopyrite. And a couple of our deepest holes are down about 700 meters vertical, and we see that ratio. Now you're getting 2-1 chalcopyrite to pyrite, so it's flipped. So you're getting better grade, and you're getting your first sniffs of bornite mineralization, which means you're getting closer to the core of the system. So when we saw that in the data, we said we probably want to drill 1,000-meter holes into this and really get into the guts of this system. Now, the proposition of drilling a 1,000-meter hole for a junior company, I just don't think it's an appropriate risk profile for our shareholders, because you can probably raise 5 million and go and do an initial program and get 7 holes or something into it, but sometimes you need 40 holes to really find it. And if we do that and we don't hit immediately and get lucky, it's very hard to get your next dollar for that type of program. And I think in sharing in the risk and the reward, now the way that we've structured this earn-in with Freeport, they're not going to give up. They're going to give it everything they have to answer the question here. And the potential prize looks quite sizable, based on very continuous copper gold mineralization at surface, either in soils or rock geochemistry over 18 kilometers, where we've identified 14 porphyry prospects. We've put drill holes into 4 of those 14 thus far, and we're hitting good mineralization right near surface in all of them. The challenge that we've seen is the geometry, where we're hitting, again, just looks like these skinnier fingers, and what we need to get into is the palm of the hand.
Dan, I like this interview. I'm getting nutritious advice and marriage advice. So it's been good. Talk to me more about this deal with Freeport here, though, because it looks large on the surface, but the first thing that popped into my mind was, why wouldn't they just buy the project outright, either the project or you at lower prices, than instead of doing this JV? And sometimes also where I'm really coming from with this is that majors aren't necessarily aligned with juniors. I mean, they could stall a project after the initial phase of the earn-in agreement, essentially squeezing out the juniors. So what stops Freeport from doing that here? And if they really like the project, why wouldn't they just buy it outright?
Yeah, I mean, there has to be a price of which that we're willing to sell it and our shareholders are willing to sell it for. And if we believe that the potential price is high, then, coming to an agreement on what that price would be today versus, they also see, it's not without risk, when you're drilling these deep holes, as I said, we need grade and we need continuity of grade. So, um, this way that these earn-ins are structured, it really, you're sharing in the risk and the reward. They're bringing the risk capital, but then they're going to capture the majority of the asset if it hangs together and it's there. For us, I look at it this way, something that's going to get Freeport there. I think it's pretty binary. In my mind, it's binary. Either this is going to be worth multiple billions of dollars, or it's not going to hang together. And if it's worth multiple billion of dollars, if we end up with 25% of it for our shareholders, but we didn't have to put in the risk capital to prove it's there, I think our shareholders win at our valuation. When we did the deal, we were a 20 million Canadian market cap company, so about 15 million US, and somebody's going to put up to 75 million US into it. And, in our view, we think it's going to take about 20 million really to answer that question. Then you're going to need a lot more money to really hit it hard to drill out if it's there. So just to answer the question, if you think about 20 million to answer the question on do you have it or not, just because you're going to need lots of holes over a very long strike extent to vector in on the guts of this system, the core of the system. It's a question that certainly needs to be answered because the potential is for something very, very special is there. But we just can't guarantee it until those holes are drilled again. So we wanted to manage our risk profile, and that's how we do it, because we think it's a win-win if we end up with 25% worth something worth multiple billions. On the downside, if 20 plus millions put into this and it turns out, look, we're not going to have an economically viable deposit here. We didn't dilute our shareholders to death by issuing 1 billion shares to try and answer that question ourselves. So I think it's a win-win from a risk management while still capturing a reasonable amount of opportunity cost on the upside. Also, these earn-in structures, they typically, if you look throughout history, it doesn't always go this way, and there's always some exceptions where the smaller company does end up as a junior partner in an operating mine. But what typically ends up happening in the majority of these cases is it becomes binary. Either the larger party puts in enough capital to say, look, we don't think it's going to hang together, and they're going to walk away, and then we get 100% of an asset back that the market says, so we're not going to give it any value because the big guy just left. Or we get onto something that looks quite sizable and favorable, and then that's typically when the larger companies start the discussion of now we just want to buy you. So these are typically, again, and there's always exceptions, and I can think of a one off the top of my head with Fresnillo and Mag Silver with the Juanicipio asset, where Mag Silver is the majority partner, minority partner on that one, but typically on these earn-in joint venture style arrangements, it ends up being binary at the end of the day, and it's about having somebody who has a strong technical team willing to put in the risk capital to determine whether there's economically viable deposit here.
What I was thinking about is more the situation of what if they spend this initial, what is it, 25 million bucks at first that they have to spend for 51%, I believe?
51%, yeah.
51% of 25. What if they spend it, they do like what they're seeing, but they just don't move quickly enough? What does that do to you as a junior? Can they stall the project and kind of drag their feet in order to make you give them the remaining 25% at a lower valuation?
So they have to, there's a time clock there that's very short, where they have to make the decision after that 25 million spent on, are we going to commit to the next phase of the earn-in and put in the next 50 million to get to 75 or not? So in the event that you're talking about where they get to 51 and then they just try and slow the project down, in that scenario, the most likely outcome is they found something that's economically viable, but maybe not as the size that Freeport would need. And then they're really going to look to sell it to an intermediate size company. of which then C3 would have a new partner in 49%. I mean, we have a right of first refusal on the other. We would have a right of first refusal on the other 51%. But we'd have to look at saying, okay, who would be the likely party to come in? As I said, that's always a risk and something we think about as we structure these contracts. But the probabilities are either the big company is going to want to end up owning 100% of the asset, or they're willing to drop 100% of it, depending on what we find with that initial investment that goes in.
Well, you mentioned timing. How long before you actually know that? When do you want to start the work, and how long is that going to take?
Yeah, so it's 25 million over 5 years, 25 million US dollars over 5 years contractually. There's that spend can be accelerated at both parties' discretion. As the operator of the first phase of the earn-in C3 Metals, our responsibility is to develop a work program and budget. And one of the things that we really liked about Freeport, there were other parties that were interested. One of the things we really liked is we were really aligned on the geologic model and the work program that we thought needed to be done. So that was very helpful as we move forward. Our plan this year is to get in, and we want to run some geophysical data that will see deep. Right now, for instance, we have magnetic data so that sees deep on geophysics, but our IP data is limited to about 4 kilometers of that 18-kilometer strike extent, and it's only reliable to about 300 meters depth. So we'd like to get some deeper penetrating geophysical data. In the meantime, while we do that, we'd like to start testing here just really in the second quarter, start drill testing some of the other prospects. As I said, we had 14 porphyry prospects and we tested 4 of them. So that means there's 10 of them out there that have not been drilled. We'd like to get a couple holes into the first 500 meters of the system and see what it tells us. It's good data to collect. And then that would be concurrent with running deeper geophysics, which would be followed up by a deep drill campaign. To run a big rig for the type of holes that we're talking about, to run that for 12 months with geologists and assays and everything, all in cost is about 8 million US to run it for a year. So my expectation is contractually there's 5 years to spend the 25 million, but my expectation is once you have a big drill rig there, that spend will be accelerated. And, we might be able to knock this out here in about 3 years or so.
When do you think the first assays from that are going to hit the market?
Well, if we start drilling in the second quarter on the first 500 meters at some of the other currently undrilled prospects to be tested, then the third quarter we would start having the assays roll out from that. And then the deep holes are probably realistically in terms of assays, you're looking at the early part of next year before you would see that.
Right. I do want to talk about news flow, and we'll get to it hopefully here in a minute. We haven't talked much about Superblock. What's happening there this year?
We're really excited about Superblock. We partner with Geophysics Jamaica, which is the largest mineral tenure holder in the country. The founder of Geophysics, Bobby Stewart, it's a very well-known family in the Caribbean. There's a Stewart family is an absolute powerhouse in the hospitality space. Ultra high net worth family, and Bobby and I we recognize that between geophysics and C3 looked like we each had part of an epithermal gold system, and to give it the best chance of success we should put it together to try and get something that would have scale. Right in the center of that area, we've now identified a 5-kilometer strike extent of very good high-grade gold geochemistry, and it's still open in both directions, and we're continuing to collect more data to see how far this goes. But right in the center of that is the only modern-day metallic mine in Jamaica outside of the bauxite industry, which is a gold mine called the Pennants Gold Mine. It was a little rinky-dink mine. It operated from 2002 to 2004. It only produced about 16,000 ounces, but what really caught our attention was the historical resource grade is 20 grams per ton, so very high grade. And, it's a very shallow pit there. There's drill intercepts that have been reported below the pit and off to the side of the pit that have hit high grade mineralization. And now with the work that we've done, we've identified multiple zones with very similar geochemistry to the old Penance mine over that 5 kilometers. And we intend to do a systematic drill test across that 5 kilometer trend to try and vector in on more of these high grade epithermal veins, look like intermediate style epithermal veins. So we're big on this. It's a gold project. It's not as much copper like our other projects. It's a gold project, but the potential for something of scale with very high grade exists. And there hasn't been a drill hole in the system since 2004. So we're coming in and by putting it together, and we expect to have a drill turning on it this month in March. We're actually just finishing up building the first drill pad and sumps right now, which means in the second quarter of this year, we would have assays coming back from the initial holes going into that program. So, Jamaica's a bit interesting that way, where we were the first mover. We picked up 270 square kilometers in the center of the island. Geophysics Jamaica, private company, a local company, picked up 4,000 square kilometers all around us. So just a massive amount, 40% of the island. And then we did a deal with Geophysics on the super block area. The owner of Geophysics, also through a private placement we did near the late 2023, became a 5% shareholder of C3 Metals. So he has an equity upside in everything that we're doing. And we put the super block project together by each contributing ground, and we run it as a straight 50-50, and we're the operator of that. We fund it 50% each. And then Geophysics did a deal with Barrick Gold in May of 2024, and Barrick's earning in up to 80% on 4,000 square kilometers. And then we've done the deal with Freeport here just recently. So what started as C3 Metals being the only company there exploring for copper and gold, now you have two major companies coming in and recognizing that geologic potential, and it's really an endorsement, I think, of the team putting this ground together, and the level of high quality data that both Geophysics and C3 Metals has collected to show that potential. So Superblock, we're really keen on it. We formed this JV about a year ago. We've taken the time to do the right surface work, we think, before you get in and start drilling. And now we're ready to drill. So we're going to start drilling it this month.
So chronologically, the first news release, or the first assays that you're going to have out are going to be from Superblock, then Bellis Gate, and then Khaleesi.
That's correct. Yeah.
Okay. And that starts in May? Basically, May is when your assays start. That's going to be when you're going to have assays back from Superblock. If we give it 6 to 8 weeks.
Correct.
Yeah. Okay. Talk to me more about the why I'm asking this is because I want you to talk to me more about the strategy. And I know you touched upon it earlier on, but the business strategy or the thinking behind owning 4 assets in 2 vastly different parts of the world. You're dealing with 3, you could even call it 3.5 different geologies here, and talk to me what your end game is for the company as a whole. Do you want to just keep coming up with assays, doing joint ventures, and having them taken out, or like where do you see this going over the long run?
Yeah, I mean, I think it depends on what the data tells us. And so, look, if we get onto, let's play the hypothetical upside game. If we get onto a 500 million ton plus deposit near surface at Khaleesi, which that's what we're all hoping for, and we'll see what happens when we drill. There's probably multiple parties at that point. If we just look at what happens historically, multiple parties, large parties would be bidding for the company. In that instance, really, this is what they're after, and they'll take everything to get this. So the way we set up the company is, okay, well, someone can come buy the company and we'll spin out, and that company that buys us will have to seed capital for exploration for these other assets, and we'll continue to backfill the portfolio with other early stage opportunities. I think we've proven with our team, with the opportunities that we have now with our asset base, that we can identify these opportunities. We can consolidate big land positions. We can work with communities and government. And we just want to do that initial test and see what we get. And if we do it long enough, eventually we're going to get lucky and we're going to get something that's good grade near surface that's going to add a lot of value. And if we're disciplined enough to stop spending on something and divest of it when it's not going to be a mine, there's a lot of companies out there that don't want to do that and don't want to admit that because it's hard going to shareholders and telling them, hey, this is what we thought and it's not working out. And we don't want to spend more money on this.
Hmm.
By having a portfolio approach and just being just blatantly open and honest with our shareholders and potential investors that this is our strategy, and yeah, it's exploration and not everything we do is going to hit, but it's just as important to know when to not spend money on something as it is when to keep spending money on something.
Yeah.
And it's a big philosophy that we have at C3. So I think there's a lot of options of things that we can do with the portfolio. And that's really the strategy and the goal of the business is hopefully we get lucky one day and we hit something good grade right at surface, and that puts the whole company in play at a very large premium and everyone wins. And then we can, spin out certain things into other vehicles that are funded that, try and get another kick at the can.
What are the holding costs or other stuff that you have to deal with between the two jurisdictions?
Yeah, and Peru's quite a bit more than Jamaica. Jamaica's holding costs are very, very low just to hold the licenses, the exploration licenses on an annual basis is less than $10,000 a year in Jamaica. Whereas in Peru, it's about $250,000 a year to hold those licenses. So it's different jurisdiction. So Peru is more, which makes it a difficult jurisdiction for juniors. As I was talking to you earlier, the questions, anyone who knows Peru as a jurisdiction, the question's always about if you have an agreement with the community, where are you in the process for permits? Because usually, actually, once you get the agreement with the community, your permitting is fairly prescriptive. But sometimes market participants don't understand that. They think, oh, the company's not able to get drill permits, but it's all hinging on, do you have an agreement with your community? Because you need to be able to provide that to the ministry to show you have the surface access to do what you're going to go do before they'll even continue to process your application. So those are the things that companies usually trip on or take time to work through, as we did. As I said, if you talked to us 2 years ago, 3 years ago, we weren't even talking about Khaleesi that much because we were in the middle of negotiating with the community. We wanted to see where that went before we were really focused in all our news flow on Jamaica. And we tell people we have this asset, we like it, it's a big geologic target, but we wouldn't give out definitive timelines on when we could start moving it forward until we got the community agreement in place. And when we got the community agreement in place, what we announced last August, we gave the timeline that we expected to be drilling by the second half of 2025. That's now rapidly approaching as we turn the calendar into 2025, and we're on target to do that. So it's a challenging place for a junior to work if you're just starting, but we've gone through all the heavy lifting to get to this point now.
I'm getting a better understanding of C3, and then I think this has been a very good overview so far for a first pass conversation. I want to talk about how you take that story, though, Dan, that you're telling me here and bring it to the market. Maybe it's worth talking about it in the context of money too, but your investor relations spending, as I mentioned at the beginning, was around $612,000 for the year that ended on August 31st, 2024. It's about 100 grand more than the year prior to that. So talk to me about how much money you're going to be budgeting for marketing this year and what exactly you're going to be spending it on.
Yeah, we have a similar budget this year as last year. The reason that it was around 600,000 last year is we were trying to target around 10% of the money we were putting in the ground. We put about 6 million into what we were doing in Jamaica last year. If you look at our financial results, so we always think of things on percentages, and I like when you open it up. We try and target 80% going into the ground, 20% corporate and G&A for the company. So I like how you opened up that way, because there's other companies that give our industry, unfortunately, in junior exploration, a bad name because they spend a lot of money marketing and promoting and not enough money going in to the ground that's actually going to move the needle for an asset. So You need to be able to advance your assets to keep them moving. Um, so, I envision a similar budget to last year from the IR side. I think we've done a really good job with institutional investors, and we're really on the radar with institutional investors. I think being able to outline our strategy and we've had relationships with institutional investors from previous companies that they've done well, which has helped get our foot in the door as a little company and build the shareholder registry that we have. I think what we really need to focus now on the IR side is, you have the money, you have a partner, a big, huge endorsement from a big partner with Freeport on one of the assets. We have the institutional shareholder base. I like to say, when we get this deal closed and I can talk about it publicly, we'll have a slide in our presentation with all the logos of all those institutions, and that pie chart's going to change, more heavily weighted institutional investors. So, what we need to go now is market to people who look at this sector, who understand the risk reward scenario of exploration companies, and say, here's a company that's funded for having 3 drill programs going at the same time that can maximize my discovery potential as an investor, that has a lot of really smart money already buying in and supporting this. And I know if I go and buy shares today, they don't need to go and raise money tomorrow and dilute me on it. And we've set up the business for that. And it's taken a while to get to this point. I joined the company about 2.5 years ago, but I feel like we're on that cusp now that we can really move forward and add a lot of value. And it took a while to get to the access and the approvals in Peru, which we talked about. Those things take a while. And it took us a while to collect enough data and then run the process to attract a major partner. Once the data told us that's what we should do from a risk management position. And so last year, in 2024, it wasn't a fun year from a share price performance perspective, because we're doing a lot of things behind the scenes that you don't have a lot of news flow. You're negotiating with and building trust with the community in Peru was the biggest thing we were doing there. And in Jamaica, the biggest thing we were doing basically from the second quarter last year onwards was talking with several major companies and trying to negotiate the best deal and running that diligence process that these companies have a timeline that it takes to go through before they're going to commit. And so, I think that's really what we need to do. We need to focus on the investor that's not necessarily going to participate in future financings, but just raise awareness, one, that we exist, two, what our strategy is, three, the discovery potential for three of the 4 projects we have that we expect to have drills turning on. The first one here in March was Super Block, Bellis Gate in Q2, Khaleesi in the June-July timeframe. And that means by the second half of the year, you're fully funded for all of this, and you're going to have drills turning on 3 of them. And it's a lot of news flow and discovery potential for a little company of our market cap.
How much money are you planning on spending on G&A as a whole? Again, last year was just under 2.2 million, about 180 per month on average, and that's Canadian. Is that the similar G&A you're targeting, or is that going to go up?
Yeah, I think it'll be similar to that. And you have to remember that includes the non-cash portion of the spend. We do, because we're going to have to, and we are right now, we're strengthening our team a little bit with I see the need for about 3 more geologists on our team with all the activity that we're going to have. We're the operator on all 3 of these projects. So we need to build our bandwidth. And if you don't have the right human resources, then you're wasting some of that investment that you're putting into the ground to get that. So that'll move some of the on-site G&A around. But I think we're well positioned here to have a similar year from a corporate spend as we had last year.
Why I'm asking you this, Dan, is because I'm wondering how much money you're going to be left with at the end of the year, and specifically because I'm wondering if there's going to be need to raise capital again in 2025.
There's absolutely no need to raise capital at all in 2025. If we have drill success and the valuation of the company moves significantly higher, and we choose that it makes sense based on that success to fund a big drill program in 2026 at Khaleesi, for instance. We may choose to do that, but we have no need to. When this financing closes March 19th or thereabouts, and they'll, assuming the overallotment comes in, which we expect it will, because we were very much oversubscribed on the financing. The company is going to be sitting between the cash we had on hand. We did a small private placement last October, and then this financing, we're going to be sitting with 15 million US in hand. Our budget this year for drilling on Super Block is 1.2 million, but that's only 600,000 to us because it's funded 50-50. And then 4.5 million at Khaleesi. So, that gives us lots of runway and cushion to expand programs, to evaluate results and see what we get. And we're in a really good shape. Now, if we have success, particularly at Khaleesi, where it looks like, again, we don't know until we drill it, but it looks like there's some good low-hanging fruit there. If we have success and the market reacts positively, we do intend to move to a 20,000+ meter program in 2026. That would be a resource definition type program to get to a first resource there. And at some point, we would want to top up Treasury to do that program. But we certainly do not have a need to do that. And if we were doing to seek more financing this year, and if we are, it's only because we've had great success and our valuation's much higher, and it's less dilutive to do so.
Right. Dan, I'm gonna let you go here. I know you must be tired of looking at my face at this point. What am I forgetting to ask you though here at the end? What did you come here hoping to talk about that I failed to bring up?
No, I think you did a great job. I mean, the only thing that I would just highlight to your listeners is, because Jamaica is not as well known as jurisdiction, people should be aware that mining's the second largest industry in the country, and it's derived from a bauxite mining industry that's been going for nearly 75 years. The mining law was put in place in 1947. It's been very well adhered to. It's based off British law as a former Commonwealth. And there's a real strong government appetite in Jamaica because the bauxite industry has been slowing down, and it's the second largest revenue generator and employer in the country. And the lever that the government would like to pull is, as these are finite resources and they've been being mined for nearly 75 years. The lever the government would like to pull is, as bauxite inevitably slows down, is to bring in other minerals to be mined. So we feel like we're catching Jamaica at the exact right time for mineral exploration and development. And the other thing I would comment on, just in Peru, where it has been very challenging for the last few years in terms of timelines to move things forward. I must applaud the government over the last 18 to 24 months and some of the initiatives that they've taken to really cut through red tape and limit bureaucracy and move things forward. We're seeing it. I've talked to other CEOs. We just at PDAC, I had the pleasure of being one of 20 CEOs invited to a meeting with the ministry, which was really a CEO Q&A back and forth. And we're really seeing the pendulum swing very favorably in southern Peru, which is, it's a mining country. It's the second largest producer of copper in the world after Chile as a jurisdiction. So, I think jurisdictionally, we're in two of the better places to be right now. And that can't be taken for granted with what we see, some of the geopolitical risk in some of the other jurisdictions around the world.
What's the biggest challenge in Jamaica right now? I mean, as it is opening up or somewhat of a new jurisdiction there, what's again, what keeps you up at night?
We've kind of learned as we went, getting things. One of the challenges that we did have as a small company is because you're the first ones there, and there's no major drill company active in the region, and it's an island unto itself. Getting a reputable drill company to come down, they'd want a minimum contract, say, pick a number 10,000 meters or something. And as a little company, we might not be able to afford a 10,000 meter drill contract. Maybe we want 5,000 or 6,000 meter contract. So it then puts you down into looking at the kind of the B and the C companies, where the drill productivity, it might not be as good, so you're not getting as big a bang for your buck on that. It actually led us to shift our strategy, and we purchased our own rig and trained our own crew, and it's gone really, really well. Now we're drilling in Jamaica with our own rig. We're depth constrained to about 500 meters, but we're drilling for all in with assays, geologist, everything, 200 Canadian dollars per meter, which is very, very good. It's about half of what you would expect to pay if you're with a contractor, or less than half. So we've learned from that. I think, having Freeport there and bigger dollars behind us now, we'll be able to get the top contractors in the world for the type of program that we want to do there now. But those are some of the challenges that we see in Jamaica, is just being the first mover. And, assays, for instance, we have to ship out half core by freight, and there's a cost to that, the weight of the rock going for assays to labs. There's no lab in Jamaica. I'm sure if we get a big enough program with Barrick and Freeport now, both in country, that one of these companies will develop a lab in the country. But that's about a $250,000 investment for a company to do that, and they need to see the steady flow of business before they're going to make that investment. So, those sorts of things, not just assay turnaround time, but just the cost of shipping half core is a bit higher, but coming out of Jamaica. But the flip side is it's extremely underexplored. We've identified 16 porphyry and 40 epithermal targets over a 30-kilometer strike extent. We have very strong government and community support for what we're doing, and the potential for meaningful discovery in a jurisdiction that has good rule of law, a very strong mining code. Mining's the number 2 jurisdiction for major discovery in copper and gold. You don't see these things very often, and that's really what got me excited. I told you at the beginning of this interview, when the board first listed me, my reaction was like, Jamaica, really? Like, I don't think this is for me. But then as I peeled back the layers of that onion and started really digging into the opportunity, both the geology was really checking out, the mining law was checking out, the government checked out, and I just thought, this opportunity is something that I really need to explore personally for myself, and I'm really happy I did.
Dan, this has been great. Thank you so much for this overview. I appreciate your time, and hopefully we can do this again soon.
Thanks so much, Antonio. I really appreciate it.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is, and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."